Hello everyone, this is Terry with Futures.io, and as always, I would like to thank you for joining us today. It is my pleasure to welcome back Ilan Levy-Mayer from Cannon Trading for today's webinar, Live Trading the MICROS. Throughout the webinar, if you have a question, please feel free to type them into the questions box. We'll do our best to answer them at the end of the event. This webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Ilan, and you'll get the pop-up to share your screen again.
Okay, good morning everyone, and you should be seeing some charts popping in.
Yep, looks good, and it's all yours.
Excellent. And this webinar will be a little bit different than other webinars you probably attended, because I'm going to be taking some trades with the micros and also go over the setups. It's going to be a little bit mix and match, because when a trade comes, you take the trade and there might not be any explanation to it, but when it's all said and done, I will give a full review of the concept, what triggers trades, what trigger stops, money management, and the whole shebang, as they say. So first, though, let's go over the disclaimer. I know that the Futures.io, and thank you Futures.io for hosting us and giving us an opportunity to share the material. Futures trading is risky. What I'm going to share here is my personal opinion and personal preference. There is no crystal ball. The concept I'm going to share with you sometimes works amazing and sometimes works pretty crappy. It all depends on the market conditions, and if it's a trending market, a choppy market, a volatile market, and I will discuss that as well. So again, keep in mind that this is my personal opinion. Futures trading is risky. Make sure you use risk capital, because if you don't, that means you should not be trading futures, and you're actually decreasing your chances by quite a bit more. Last but not least, even though I'm looking at real-time market conditions, I'm still trading a demo account, and it is different than trading live money accounts simply because there's no live money on the line, although that's going to be one of the advantages of the micros that I'm going to discuss here. So keep that in mind as well. Okay, so as we going to go over the charts, go over the setups, I'm actually going to share with you 3 to 4 tools that I think you can take and then implement in your own trading. Try it in your own trading, and it may be that you just picked up 1 or 2 tips from today's webinar that will help you make your trading much better, and that is the goal. So you can read a little bit about me and about us. Cannon Trading has been around since 1988. We were one of the first to offer online trading. There was a software back in the days called Leo Web, and we were one of the first firms to offer online trading. And as the industry evolved, the market evolved, we also evolved, but we still keep to our main core beliefs and how we feel a brokerage house should be, and that is customized service. Not all traders created equal. Everybody has different needs, and a good broker that understands the markets, understands the technology, is very valuable, especially in today's industry and the way everything is working. So I'm going to start right now. I'm going to share. I see that there's a couple of trades coming up, and I'm going to share a few of the ingredients of what I call a simpler approach to day trading. So what you're going to see is you're going to see a chart, mini Nasdaq chart on the left, mini S&P chart on the right. I have the big contract charts, even though we're going to be trading the micros. And since I have a trade that already took place here, I'm going to activate my strategy. Let me make sure I got the right strategy. Yep. I'm going to activate my strategy, and I'm just going to go ahead and buy right now 3 of the micros while we go over the concept, and I'm going to explain exactly why I bought them, where's the stop going to be. I'm going to share when I take the first target, hopefully, if I do. Again, Some markets are better than others, and sometimes the system or model will work better than other times. And right now, I'm looking at the chart on the right, and I got the first support right here at 2781.90. I'm going to make sure that my stop for those 3 micros that I bought is a couple of ticks away. So 2781.
Hey, Ilan, 1 second.
Yeah.
I'm going to make you presenter so that way you can see the questions as well when they come in. So if you just happen to see something, you can answer it right then.
Okay. Okay. It may be a little harder for me to answer the questions during the live actions, but I will do my best as we go through it. So hang with me for a second. Okay. Okay, so I'm gonna try to answer the questions, but again, it's gonna be really a mix and match type of webinar. I'm gonna jump from topic to topic while the markets are alive and trading, and I cannot control the market action, so that's gonna dictate what I'm doing. And I did get a double signal both on the mini Nasdaq and the mini S&P, and so I'm not gonna take both trades because I don't think it's gonna be wise, because it's pretty much the same direction, even though the magnitude might be different. So I'm going to go through the presentation, and then I'm going to go back to the trade, explain why I took it, and what I'm going to do with it. This concept that I'm sharing with you will work well in two-sided volatile markets or in choppy markets, okay? This concept will not work well in a very strong trending market. And that goes to the point that, you know, there's a few different ways to trade or short-term trade. There's breakout, there's counter trend, and there's many things in between. And some days, certain models will work better than other days. But first, I want to talk about the micros and why I think they are actually a great addition to the futures market. And I'm glad the CME introduced the micros. I think it's a good thing. They're very liquid. I'm looking at the micro mini S&P, and let me see if I can share this with you as well. So here's the big S&P right here, 2786, 700,000 contracts. The micro has 111,000 contracts. That's more than the big RTY. That's more than silver. That's more than copper. That's more than many different markets. So the volume is already very, very good. Great volume on the micros. And what I like about them, and again, this is my opinion, personal opinion, it's a great transition from traders, clients that want to make the switch from sim trading, demo trading into live trading. Because I don't care how much demo trading you do, everybody is the greatest trader ever when you trade in demo account. There's no fear, no greed. You put some money into it, even though if it's smaller money, and that changes, that puts those big ingredients of fear and greed into trading that makes a big, big difference. So great tool to transition from demo to live trading. The second thing, you know, you traded before, you're currently trading, you came across a trading concept, you heard about something, a new strategy, you did your testing, looks great. Now it's time to put it with real money, because everything is always different with real money, or what I call forward testing. So again, micros, 1/10 of the size, not bad at all for that idea of testing some ideas. Another thing I like about the micros is sometimes you might be in a position, you long the mini S&P, and you do not want to use a stop, but the market is getting close to where you would usually normally place a stop. At that point, you can sell 2 or 3 micros. Maybe you sell 5 micros as a hedge. So you can use those products as a hedge in addition to stops. So instead of a stops, when you're trading the regular minis, what I call now the big contracts. Another advantage of the micros is that if you're looking to do position trading, micros are probably a better chance for you to have staying power in the game, because when you use the regular contracts, every move translates to much bigger money. In your favor or against you, you'll be very eager to take profits when they come. You'll be very scared of losses when they come. MICROS might be a little bit more suitable for that. My understanding is that they are more liquid than the ETFs right now, and maybe a better hedging tool than using an ETF. And last but not least, I don't like this strategy, but I know a lot of traders and a lot of clients use this strategy of the averaging up, averaging down until the market finally goes their way and they have some profit. So if you do use this strategy, you're probably better off doing it with a micro than the big contracts, especially for the smaller accounts. It just makes much more sense. Now I'm going to talk about the short-term trading and what I'll be doing here, and I'll explain some of the foundation for that. So my thought is that there's more two-sided trading days than strong trend days, okay? And every day is different, and you will have strong trend days, and you'll have some days that are just dead, just choppy and with not much action. But there are more two-sided trading days than strong trend days. That's why I look for what I call change of direction, turning points, reversals. Sometimes they happen, sometimes they don't. Another foundation that you may implement or try when it comes to short-term trading is I like to use range bars instead of time bars. And we can take a look at the chart right now. This is a range bar right here on the mini NASDAQ, and I'm going to duplicate it. By the way, I'm using Sierracharts. This is one of the charts that we offer here, but we do offer probably like 10, 15 different trading platforms, different charting packages. We can customize the trading solution for your needs. So now I'm going to go ahead and put a, excuse me, not a historical chart, but an intraday chart. And I'll use a 15-minute. I'll do apply. Okay. Today, actually, the 15-minute chart looks a little bit better than the range bar charts. But what I like for short-term trading in range bars is that when the market moves fast, the bar will complete faster. When the market is slow, it's going to take longer for the bars to complete. Well, when you're using a time chart, if it's a minute chart, 3 minutes, 4 minutes, every time that time frame passes by, a new bar starts. Whatever studies you're using, I'm going to get different values, and it can do two things. First, it can generate what I call some false signals, or secondly, it can generate some delayed signals, meaning you're waiting for a 10-minute chart to complete, a big move could have already happened. So again, my personal preference for anything trading less than the 15-minute time frame is to use range bar. And I will use different range bar values for different markets depending on the volatility as well. And I'm going to pause here for a quick second and see if there's any questions that I can answer while we do this. But here you can see the signals on a 15-minute chart, and I'm going to explain those signals again momentarily. And here you can see a range bar chart, okay? This range bar chart started at 6:40 my time, which is Pacific time. And here is the same, let me see, pretty much the same time frame over here on the 15-minute chart. Okay, I'm going to minimize, review the questions for a second. One good question is, what market conditions work best with your system? I'm not going to say it's a system. It is a model, it's a concept that I developed after observing many different people, many different traders. And I think when you have volatility, speed in the market, and two-sided action, that's when this model works the best. Like I mentioned earlier, does not work so well when you have a strong trending market or a choppy market, which is what we're getting to get a feel here for. Another question is, can I hedge a position of the 6E with a micro euro? Yeah. Of course, we do offer lower margins on such a hedge. And the best way for those things is to visit our website or just pick up the phone. Let me go ahead and, if you visit cannontrading.com, go to contact us and submit an inquiry, or you can do a chat, or even better, you just pick up the phone and you call 9572. I'll post that number later. But yes, you can hedge micros with big contracts. There is a margin break, and we do offer it. And the MES does mirror the ES. It mirrors it at 99.99%. It's the same exact underlying product. In today's high-tech world, I don't believe there's room for arbitrage, although I'm sure some bigger, faster traders may try to. But those two markets will trade exactly the same. Another question is, do you swing trade trading micros? I think swing trade is more suitable for micros, depending on your account size. If you wanted to swing trade one mini S&P, my personal opinion as a broker that observed many traders for 20 years, you should have at least 15, 20,000 in your account. If you have 6, 7,000, you may not even have the margin. Okay. The market noise for swing trading can take you out. On the other hand, if you're using one micro or two micros, you have much more cushion to really look at the chart, really look at the setup, and take the right trade and not what trade money forces you to. Another question was, what about volume charts? I think volume charts, tick charts, all of those are still better than minute charts for short term. And I do see here somebody that says that what we saw on the mini NASDAQ was not a minute chart, but rather a range chart. So let me just see real quick. Okay, so this is the 15-minute chart. And let me remove a couple of the studies so you can get a clearer picture. Okay, so this is the 15-minute chart. Okay, that's how it looks like versus my range bar chart, which I'm going to try to bring it up again here. Okay, and this is the range bar charts. Okay, yes, you're right. Whoever mentioned that was right, and thanks for putting that to my attention. And now I'm going to go and I'm going to answer the actual mechanism of the trade, what makes the trade moves, why am I going into a trade, and go over the concept again. So I'm going to pause from the questions for a couple of minutes and we'll review that. So we only have a trade right now on the mini S&P. And why did I take the trade? I got a buy signal in the form of an arrow right here. Let me see if I can use the highlighter. So let me use the spotlight. So right here, we got a buy signal in the form of an arrow. The arrow is an output of moving averages, geometric moving averages, momentum, and a few other spices I put together to create my own model. And when I get the buy signal, I'm going to go over some of the other points right now. I look for something I call price confirmation. Okay, so first thing is I'm using the range bar. I'm looking for exhaustion of selling or buying, and the formulas are inside of the study. And then the second step is I'm looking for a price confirmation. What is a price confirmation? Is I want to see, just because my signals decided that this might be a good long, I want to see that we take the previous bar high. So in this case, we got the signal right here. Previous bar is right here, and I programmed Sierracharts to give me this purple line that says if we break above it, you should buy. And that's what I did. So I do like to enter on stops, meaning I want to see that we have follow through of price action to confirm the model. And the longer it takes for price action to confirm the model, the less chances the trade has as to materials. And that's what I think we're seeing right here. And again, I'm thinking I'm confusing some of the charts, but give me a second. It's taken already 1, 2, 3. There's like 8 different bars that we went through, and I see no follow through, no continuation. So again, not a crystal ball. I don't know what's going to happen, but at this point, I want to put my stop quite a bit tighter. And this is where I'm going to share with you another tool that I like to use, the Parabolics. These are the Parabolics right here. Parabolics on the way down. Okay, Parabolics on the way down. Parabolics on the way up. So after my initial stop, which I will look to use support and resistance level or recent low, this was the recent low. After the initial stop, depending on how much time I've been in the trade, I will decide if I need to move the stop higher or not. And in this case, I do need to move the stop higher simply because too much time has passed. Maybe it's lunch in Chicago, maybe just no news, but the market has been dead. It's doing nothing. So at this point, I want to move my stop very close to the 27.83. Okay. So I'm going to drag this one right here to the 27.8250. Curious where my third one is. The third one is a little bit lower. Okay. My first target is I'm going to use the Bollinger Bands, and right now it looks like it's 87.50 for the first one. So I'm going to drag the first one lower to 87.50. That's my first target. And the reason I'm doing that is because we got into a trade. There's no follow through. There's no energy in the markets. Of course, they heard that we're having a webinar. And I did see a comment from somebody who says, oh, this guy's trading a demo. Yeah, compliance said trade a demo, even though it's micros. And trust me, it's not easy to trade a demo or live in front of a bunch of people trying to explain what you're doing, but it is what it is. This is real-time price action, and I hope you guys will all pick up some information from it. So again, I'm using Bollinger Bands, Parabolics, and here's some key ingredients to the concept, okay? And why it's actually very nice to have the micros. Because if I had to trade 3 mini S&Ps or 3 mini NASDAQs, you really need 15, 20,000 account size, not because of the margins. Our day trading margins are like everybody else. It's 500 and we'll work with you, but those lower day trading margins can work against you. It really imposes you to utilize too much leverage, and futures trading already has quite a bit of leverage in there. So with the micros, yes, I can trade 3 micros. I can even trade 9 micros, and it's less than 1 mini S&P, which is great for this specific model that calls breaking the trade into at least 2 or 3 parts. Let me see what's going on here with my chart. Range bar, 23. Okay, I made some, I don't know, gap fill, none. Range bar, standard. Okay, apply. Okay. So breaking the trade size into more than one part does help. For me specifically, I learned that if I can take profit on part of the position, it allows me to manage the trade much more relaxed. I'm able to look at the chart, utilize some of my rules, think about it, see what I want to do, look at other correlation or indicators that I use. And that's why I like to take profit on the first trade rather quickly. And I'm programming it in the strategy order right here. So as soon as I go in, stops go in and targets go in. Then with the micros, again, you can go 3 lots. And the third one, hopefully, if the market goes your way, you want to start, the second one, I'm sorry, you want to start using the Parabolics as they go up. So let's take a look at a trade that already took place. Here's a short signal that was right here, okay? When the short signal appeared, you got a little purple dash line. That dash line said, if we break this price, go in. And once you go in, you will have those automatic exits to take 1 profit pretty quickly, okay? So we took 1 profit on this little trade. Take 1 profit on one pretty quickly. Take a second one if you can reach either major support or resistance level, or if you get a close outside of the Bollinger Bands. And I'll share my Bollinger Bands parameters here with you shortly. So in this, again, this is hypothetical. Always 10 times easy to look back and say could have, would have, should have, than doing it in real time. But that's the concept. The third one, you want to have what we call a runner. And either you're going to get stopped out by the parabolic, or you might get a reversal signal. And in my opinion, when you do, with this model anyway, when you do short-term trading, you have to have a runner, or at least a chance to have a runner. Why? Because one runner can make up for 5 different losers or 4 different losers, because sometimes the runners can be pretty large. And again, this is my personal idea. That's my personal opinion. And this is based mostly as a broker who assisted hundreds, if not thousands, of clients over the years. So you can compare me to a coach or a basketball player or whatever you want to compare it to, but you see a lot of things from the sideline. You see common mistakes that traders do, and that's what I'm trying to share with you. And I'm going to go again over all the setups and the different indicators that we have. I want to take just a very quick, tiny break and share a few resources with you before I continue to the next slide. And those are very useful uses. So I'm going to bring you to our website, which is cannontrading.com. Okay, under the education, you will see a plethora of resources, articles, most of them written by our own brokers, my colleagues, myself, based on years of experience. And there's a few that I really want to share with you right now that can help you. The first is the daily support and resistance levels. All you have to do is click on it and then sign up. All you have to put is your name and email. We don't need anything else. And once you do that, you will get an email every day. The email will have a variety of resources and tools, but most important, it will have daily support and resistance numbers every day for the next day for the main markets. The mini S&P, NASDAQ, Dow, Russell, the grain, some metals, the crude oil. Crude is one of my favorites. You're going to see the reports that are due for the next day, the impact, and many times I will share tidbits from experience, tips that can help you, and much more. On the same section of education, if you go and click on Survivor Day Trading, you will be able to read an article that I wrote a few years back that still is very, very valid, that talks about how to manage your risk capital, your trading capital, money management when you're day trading. Too many people, myself included, concentrate on the signal, buy signal, sell signal, what is the success rate? Sometimes so much more important than all of that is actually how you manage the trade, how you restrict your losses, how you take profits. Maybe you need to stop when you hit a certain loss limit. Maybe you need to take the money and call it a day when you hit a certain profit target. So that is right there. So feel free to go in there, sign up, read it, and enjoy it. Okay. And last but not least, I want to put together real quick a link to videos that are talking about, I want to show it to you, the trading videos that go over some of the concepts. So I'll put that in the chat right now. And you guys can sign up and see 3 videos that I recorded on the topics mentioned in this webinar as well. Okay. And while we're waiting for the market to give us a little bit more action, let me see if there's any more questions. No. So let me go back and talk about the actual signals. What those signals mean, what I like to do with them, etc. So since we're in a trade on the mini S&P, we'll just focus on that for now. And so the arrow looks for moving average crosses with certain levels, and they also look at the last 3 bars to see if what I consider there was exhaustion in buying and selling and a possible for a turning point. That will generate the arrow. So that's the first part. Second part is that price confirmation. Again, just because I got an arrow, I know that I don't have a crystal ball. I know that those markets are a living entity that can do what they want to do. So I'm thinking, okay, if price follow my signal, there's better chances for it to be a good trade. Okay, so the computer will generate this purple line, and if I go above it, usually I'll enter on a stop. That will be my long. So that's the price confirmation. Secondly, we're using a range bars, which we are. In the case of the mini S&P, I'm using in this example 8 ticks. But depending on the volatility of the market, you may want to use sometimes 8 ticks, sometimes 10 ticks, even up to 11 and 12 ticks when the volatility is extremely high. A few other studies that you're going to see right now are the Parabolics. And as I mentioned, I use the Parabolics as a possible trailing stop when the market is moving my way. So right now, the trailing stop on the Parabolic is going to be 27.8375. Again, I want to give myself some room for error. So I'm going to move my stop on the micro. Let me see. I need to move it a little bit higher. So I'm going to move it to 83.25. Okay. Still long too. Now it gives me the average price. Shows me the open P&L. I closed a little bit of profit earlier with the first target. And the first target, if you remember, was when we exited above the Bollinger Bands. So that's what I use the Bollinger Bands as well. When the market, exit those Bollinger Bands, a lot of times they'll have a pullback. Not always, but a lot of times, and I use it. So let's take a look at the Bollinger Bands, and I'll share with you the settings on that. So I'm using the standard deviation of 2.7 and 23 periods for my Bollinger Bands. This one is actually simple moving average, but my experience have showed me that the exponential or the weighted are better. Let me take a look to see how the exponential is. Not a big difference, but we'll keep it there. So that's another foundation for the concept. Another one is using multiple contracts, because you don't know what's going to happen, and it's nice sometimes to break your trading size in more than one piece. So you can take profit on the first one, move the stops, etc. Let me see. There's a question right now. Can you give more info about the algo signal? Yes. So the algo signals, they're looking at something called geometric moving averages that are a little bit different than regular moving averages. They're also looking at the momentum of previous bars, buying, selling, pressure, looking for the exhaustion. And then when we get a certain cross, it will generate the buy signal. Okay, that's one signal. And by the way, you can have a free trial, a 3 weeks free trial to get all those signals, and you can put them in any market that you want, meaning we can take a look right now. Let me do something. That concept will work on any time frame, any market, and sometimes it works better than others, but it will show you the signals. And what I'm going to do right now is I'm just going to go ahead and look at crude oil. And let's see what crude oil looks like on a daily chart. So while we're waiting for the data to load, I see another question is, what is the Fisher transform oscillator in the bottom of your chart? It's a study. I like to call it the Fisher inverse. I found it to be a good study, good oscillator in the family of RSI and %R, just a little bit smoother. And for me, it helped. And why am I not getting the let me try one more. And again, over here, we offer quite a bit of different trading platforms. My expertise is actually with the CQG trading platform. Sierra is a secondary one. And we do offer free Sierracharts to new accounts. And our brokers will be happy to assist. So we're going to look at a crude oil daily chart and take a look at the different signals that you got. And again, I'll go over the signals and explain what I feel is like almost like a visual guide while I'm trading. And crude definitely became one of the leading markets for day trading. The volume is excellent. And not only that, there's a lot of fear and greed in that specific market, which day traders, or at least myself, I like the fear and greed. I think it helps. All right, I'm having issues with my crude oil for whatever reason. I'll fix it and we'll take a look again. And in between, the market, as you can see, is really doing much. Like yesterday, where it moves up and down, and I can go back in the chart and show you how the signals. And we are going to do that shortly. So this is the daily chart on the mini S&P. I'm not having much luck with showing you the charts the way I wanna show you. So we'll just stick with what we're doing right now. So the arrow is the foundation for the buy, and then as you can see, you'll see some squares, red squares and green squares. And what those squares mean, two things. One is if you're long, you should probably look to get out. Maybe put your stop much higher or much lower, depending on which position you're in, because this is a sign that the market is oversold, overbought, with a good potential of reversing. Now, I heard from previous clients and current clients that sometimes they like to use those as a counter trend signals for very short-term profits, or at least attempting to make profits. And you can see that usually those squares will have some movement in the direction. The question is how much of a movement. So red square suggests it was overbought. Green square suggests oversold. And then again, red square, in this case, did not materialize, at least not now, suggests overbought. But you can go back and explore that on your own and see how it looks like, but that's the other ingredient. So if I'm in a trade right now, since I'm long on the mini S&P, and I have one contract, let me see how many contracts I have real quick. Okay, I'm still long too. If I get a little pop up above the Bollinger Band, I will look to get one out. Okay. In between, I do have a trailing stop setup that is moving my stop automatically, and that is based on the strategy here. I configured in the strategy. When you go to configure, it can tell you first profit target, second profit target, how much is the stop, and over here I put a trailing stop on the last one, just in case I'm in a good trade and the market starts moving fast my way. Whatever happens, that stop will keep moving. Okay, so over here, we're getting a little pop above the Bollinger Bands. So I'm going to take one and put it right here. So now I'm only long one. Okay, I'm only long one because we got this pop over the Bollinger Band, and on the last one, I'm going to let it ride. When I let it ride, and the computer automatically will move my stop with me. The question, how much? I'm not sure. This is a resistance level right here, the 27.91. Okay, but I have no idea how far it's going to go. I want to give it a shot and let it go a little bit farther. And that's why I have a trailing stop that will move automatically. Every time the market moves my way, it's going to move up with me. Okay, so let me take a quick break, about 30 seconds, pump in some more coffee into my system, and I'll be right back. Okay, so I'm back, and I'm going to go over this more questions that I would like to answer. I know, again, I apologize in advance because I feel the webinar is a little bit all over, but that's due to the fact that we're watching the market, trying to react to live market pricing while explaining a concept and pointers that may help you. And I congratulate all of you for attending the webinar, because you may just pick up one thing. You may pick up, oh, let me try those range bars instead of using a minute bar. Or let me try this concept of price confirmation. Make sure that prices confirm whatever signal I got. And it may help you in your trading, and it may not. But the fact that you are here and you're watching and you're listening, that's great. That's the first step. Again, Cannon Trading been here since 1988. We do work with multiple FCMs, which is, I think, one of the biggest advantages in this industry nowadays. There's only a few of us left, what we call independent introducing broker. There's either FCMs or guaranteed IBs. And the other two will only offer you what they can offer. If company XYZ offers Ninja, that's all they're going to offer you. If company XYZ offers TT and that's it, that's all they're going to offer you. We can offer you pretty much everything out there because we do have a relationship with multiple FCMs. Some clients want to sell options. Not all FCMs want to accommodate option sellers. You talk to us, we will talk with you, and we will find you a setup. Some traders need exchange-hosted servers because they're high-frequency traders and they need to trade for extremely low commission. We can do that. We have enough relationship with some of the biggest companies out there that we can find you a customized solution. And while I'm chit-chatting, I see that our market hit the major resistance point, which is R1, but I'm already out of 2 of my contracts, and I only have 1 left. And that one I want to just trail up. At this point, 86.50 is a pivot point. I think if we go back down there, that's not a good sign. So I'm going to raise my my stop. I'm going to raise it above my entry level. I'm going to put it at 86.75. This way I know I guaranteed profit even on the 3rd contract. And hopefully I can let this one ride and see how big of a runner it can be. Now I want to answer some questions that I'm watching on the screen. So give me a second. Okay, is there a mini for crude and is it liquid? Yes, the mini crude is pretty liquid. It's half the size of the big crude, but just on the same token and on the same concept of the micros, a little bit not as small, but still another product that you can try on a smaller exposure, still risky, still money at risk, but a good product for less exposure, a good product maybe to try different ideas, a good product to hedge the big crude if you do not want to get stopped out. So yes, mini crude is good. What is the difference between the support and resistance little boxes and the red and green lines? Okay, so those support and resistance levels that I'm going to highlight right now, this one right now, R1, R2, PP, which is pivot level, S1, support 1, S2, those are levels that I added from the Sierrachart menu. They use an hourly time frame, and every hour they're going to calculate the most updated support and resistance levels. And that's why you see that those levels are updated during the day. And I like that SR formula that Sierra used, and I like it a lot. The red and green lines, so this is support, this is resistance, power pivot point in between. Do you reference cumulative delta at all? My answer is nope. Is the algo available for NinjaTrader? No. The algo is available on 3 different platforms. The Sierracharts, the Gain Capital platform, which we call E-Futures. And if you open an E-Futures account or you download an E-Futures demo, you get this algo automatically free for 3 weeks. You can try it. And if you open an account, you get it for the first month for free. Let me show you real quick where you can sign up. I like the Gain platform a lot. In addition to CQG, Transact, those are some of my more favorite platforms. Both Transact and E-Futures are free for you as a trader. There's no monthly cost. And both of them have some really, really nice tools that I like to use. So if you go onto a homepage and you click on Free Cutting Edge Platform, you're able to sign up for a free demo for the E-Futures International. If you click on the top trading software, I recommend clicking on Transact AT if you want to try a demo of that. Another very nice platform. And again, you can see other platforms that we have like CQG, the Cunningham, eSignal, Bar Chart, there's Bookmap. We also offer Jigsaw. And recently, API or automated trading has picked up quite a bit, and we can accommodate you in that aspect just as well. Let me take a look. We keep moving up. This little resistance points will now act as a support as long as we can move it up just a little bit more. And we'll wait for that. In between my order entry is moving the stop, the trailing stop up, and some good there. Another question: are you going to do some other trades as an example of the webinar? Not today. Last week I did one where we traded crude and the mini Nasdaq. Today the focus is on the micros. Again, I really like the micros. I think they're a great tool for newcomers, smaller accounts, test driving new ideas. Good tool. Do you offer trading futures forex on one account? I'll have to ask my forex expert. I believe it is 2 accounts under one roof, but it has to be a different forex account. It has to be a different futures account. I'm not 100% on that. Feel free to call us, and you'll be able to do that. 94.50, is that a good area to sell the S&P? Right now, it looks like it, but who knows? I mean, that's the next resistance level is right around 95.50. I would have to look at a daily chart or a 30-minute chart, which is what I call my longer time frame. So let's take a look here. This is the daily chart of the mini Nasdaq. That's from CQG. Let's take a look at a 30-minute chart of the mini S&P. Looks like the main level is right around 97. But as you can see, the market has been, after a very volatile day yesterday. I mean, yesterday we had some nice moves up and down. Moved down and then we bounced up. But today, really today I'm looking, let me take a look. From the moment the cash opened, which is right around here, the market had 14-point range. We had about 50 or 60-point range yesterday, which is somewhat normal. The markets, they cannot always move fast, or slow. It's like a rubber band. You stretch it too much, it's going to slowly bounce a little bit less. And that's what we're seeing today. I don't remember by heart what reports came out or what reports are still coming, if any. But when it comes to day trading, the 30-minute chart for me is quote-unquote the longer-term chart. And then from there, I would like to look at the daily, maybe the hourly, just to get a better feel for it. But right now I'm looking at the 30. I'm like, okay, 83 to 97 is the range. Probably going to trade in the range unless we break one way or another. And that will be, again, my longer term when it comes to day trading. Let me go back to Sierra and the market that we are in, which is the S&P in this trade right here based on the long signal. Okay, I have not gotten any square. A square will be a sign for me that maybe I should put my stop much tighter. The market is moving slow. Nothing too exciting. So a good question here. What is the range value equivalent for a 15-minute chart? And what you need to get that answer, what you need to do is some homework. You need to open a 15-minute chart and a range bar and play around. Because again, the range bars will complete fast when the market has a lot of activity, a lot of action, and vice versa. So I'm going to guess 15-minute charts when the mini Nasdaq is going to be right around 33 range bar or more. And we can take a quick look, but let me see. Over here we have 23. And the bar completed at 7:04. The next one was 7:05. 7:05, then 2 minutes. Then look what happened. 5 minutes, because the market was slow. Minute, market was faster. 3 minutes. Let's look recently. Okay, oops. Okay. This is the same signal that we got when I went long the S&P, but since, as I mentioned, I felt the trades were very correlated, I only went long the mini S&P. So we're looking at 1 minute, 3 minutes, 2 minutes, 4 minutes. Let's try to go ahead and increase the size to 33 ticks. And that will change every day, but what you need to do is really do a little bit of homework. Look at a 15-minute, and then look at a range bar and see what becomes a closer. But anything above 15 minutes, I like to use minutes. So if you're a trader that's looking at 15, 30-minute chart, I think you should stick there. If you're a trader that look at 1 minute chart, 2 minute chart, 3 minute charts, personal opinion, throw it out. It's trash. A 1 minute chart, in my opinion, is really, it's nothing. It's just 60 seconds with disregard to how much volume, how much speed, how much, what type of price action. Here's the 36 sticks. So it looks like this was 7 minutes, 5 minutes, 4 minutes, 10 minutes, 11 minutes. 36 sticks will probably be as high as I will go on the mini NASDAQ personally for quote unquote longer term day trading. Okay. In between, we got this little mock trade that I'm doing on the mini S&P, still going our way. It's going higher. I'm letting the runner run, as I mentioned in the PowerPoint. Okay. Do you offer a particular trading system that all of your signals, and so how is it priced? I don't, to be honest. I mean, I'm offering this model. I think this model is great because every trader can take this model and do whatever they want to do with it based on their pain for threshold for pain when it comes to losing trades, you know, their style of trading, their risk capital, the markets they trade, because you can take that concept with the signals of the arrows, the squares, the support and resistance, and apply it to any market, any time frame. And I think it's better than just putting you in a black box system. That being said, I want to share with you a few other systems that we do have, and I like. If you go on our website, under trading software, click on iSystems. Once you click here, you'll be able to explore more than a few systems. You can backtest them. You can see how they did in the past. It will show you. There's one that I really like. I think it's this one. I have a few clients in this system. And so what you'll see, and it's been long bonds and doing well the last few times. So what you see when you click on those iSystems, sorry if I'm jumping from place to place, is either a white color, a beige color, or a green color. Green color, that means this is live trading. There's accounts that are trading the system right now. Okay, and those are the results. Beige color, which you don't see in this case, is what we call forward testing, meaning the developer gave iSystems the code. They're running it. He cannot modify it. He cannot change it. He cannot optimize it to the past, and they will record the results, which is great. Backtesting for me is just the first step to say, okay, maybe this concept is as a point, maybe it's a valid concept. Let's see how it goes going forward, etc. And when you click on those different systems, you'll see the cost per month. You'll see if it's a swing system, day trading system, what market it will trade, what is the suggested capital and required capital. And any of our brokers here can explain you exactly the terminology, go over with you the risks, the opportunities, because just because a system is automated doesn't mean you cannot lose money. I've seen systems make money and I've seen systems lose money and anything in between. But we do have many systems, and you can go and you can filter those systems. You can say, I want to see that it's been tracked. I want to see that it's trading the mini NASDAQ, or I want to see that it's trading such and such. And you can apply those filters and it will spit out the results. And then you click on them and you can see exactly the results and could have, would have, etc. So another question, Ilan, with you guys, can you get Sierracharts basic version for free? Actually better. With us, if you open an account and you trade 10 round turns a month, you get Sierra level 5 for free, not the basic one. So that's what we do with Sierra. Sierra, great charting package. In my opinion, one of the best charting packages out there for the money, because even if you have to pay for it, you can get Sierra for around $20 to $30 a month. Okay. CQG, in my eyes, is the leader, the flagship, quote unquote. The Gain Capital or OEC Trader, or what we call E-Future charts, are great charts for free and a free period, meaning you don't have to trade one trade, you still get them for free. The platform as a whole is a great platform. I mean, I trade options on it, I trade futures, I trade spreads. Sometimes I'll, if I need to put a good till cancel trade that says, I'll give you an example. I did it with a client the other day. I said, buy soybean oil. If we break, I want to say it was 27.30, buy one on a stop. If it happens, I want you to put a limit at 28. Forget what was the price. I can look actually at the chart and tell you, and also put a stop. Not only that, when you put a stop, I want the stop to be a trailing stop. And if that's not enough, I'm telling you that software, make it server side. So if I go to sleep, if my computer is off, if my internet is down, those stops will continue to work. So let me see real quick the bean oil, because I remember I put the marks on it. Let me take a quick look. Yeah, I want to say I looked for, there was a fifth wave, Elliott wave right here, and I said if it's going to break and close above this middle band, which it did over here, I want to go long. Okay, again, I'm showing you examples of good trades, and I definitely need to show you some example of bad trades, because you always have to have a balanced approach, and not all good trades are good trades. But I remember that specific example, telling the machine, buy it on a stop, and when it gets filled, put a stop, put a limit, make them service side, etc. And okay, at this point, in my opinion, that mini S&P trade has less chances of making it. I feel like we need to put a stop right around 27.90, maybe 89 and 75. So I'm going to turn off the strategy right now. Okay, I'm going to cancel my stop. Okay, and I'm just going to put a regular stop. Let me see right here. 90. I'm going to put the stop right around 89.50, just because I feel we had a little bit of exhaustion, but you may still have room to go higher. I don't know, and that's how I plan. That's how I want to manage the trade. Okay. So again, great platform. The E-Dash Futures platform is a really, really impressive platform for day traders, swing trader, option traders. Transact AT is a beautiful feature called daily loss limit, because I've talked to many clients and prospects before that tell me I am my worst own enemy. I know how to make money. I'll trade 10 days and I'll make money 6-7 days. And then in one day, I'm going to wipe up my account. I do revenge trading. I double down. I average up. I do everything I know that is wrong. I can't control myself. And that's when I tell them, hey, got a solution for you. A feature called daily loss limit. You tell me that you want your loss limit to be $1,000 or $500 or whatever it may be. We set the system. If you're down that much, the system will liquidate you, will cancel working orders and tell you go to timeout, speak to your broker, go take a breather. And that, again, my opinion, that helps, because I've been there when I was trading with clients, and we just got into this thing that we just refused to take a loss. And that can kill anybody's account. I've seen it too many times. A good question is, sorry, why did you move your stop loss to 89.50? So I moved my stop loss because I look like there's a little bit of a backing up from the upper Bollinger Bands. We've been in the trade for a while. I looked at the recent low, which is the last 3 bars low, 2 bars low, and it was 27.90. So I figured I'll put the stop half a point below, just in case we got a little bit more power into this rally that I'm in there. But if not, at least I made some profit on the full trade, meaning on every one of those 3 lots, we locked in profit. And again, this is an example of a good trade. I want to show you the same exact concept and how it did not turn on so good. So this was the signals that we took. Here's the signal before. Okay, we got the signal. We got a confirmation. It went up a little bit, and before you knew it, it stopped us out. We got another signal after, but in between, we got stopped out. Over here, similar, although you would have taken profit on the first and possibly the second contract right here and moved your stop where the parabolics are. So this one may have been a scratch trade, but again, not a winner by all means. The one before that, good trade, winner. The one before this, not a winner, definitely a loser. So again, there's no crystal balls in this business. You really got to learn and find what works for you, because you're going to be different when it comes to your risk tolerance, your risk capital, your personality. Are you patient, not patient? Are you disciplined, not disciplined? But I really hope that you were able to pick up a few ideas and tools. And I'm going to take another 30-second pause. So if you have any other questions to think about, let me know, and I'll be right back. Okay, so once again, I want to show a couple of things. You want to try this concept, you want to try this model, just come over to our website, cannontrading.com, go onto education, and click on trading signals. Click on the trading signals, and you will sign up for 3 weeks free trial, and you'll see those indicators in there with some examples. We send you a little bit of a little PDF that explains some of the rules and everything. So that's over there. That's free trial for the algorithm. We can set you up with Sierracharts free trial or the E-Futures free trial, or for qualified prospects, we can set you up also with the trial on the CQG platform. If you scroll down on the front page, you'll see today's post. This is our daily blog, like Memorial Day hours last week. The fact that we had a webinar on the MICROS, there's a MICROS trading contest that actually taken place. So if you want to join the MICROS trading contest, I think today is the last day. Give me a second. I'm going to post that link because this is for the contest. That's actually a great way. A trading contest on the MICROS using a demo account with the same software that I'm sharing with you. I'm posting the link right now. Okay. And no, with all due respect, and I respect Ninja as a company and as a software, but we do not offer NinjaTrader. None of my indicators will work with NinjaTrader. Another question, I'm a Canadian in BC, can you service me? Yes, if you contact us first, we can service you. So visit our website, give us a call. I'll post in the number right here, and we can service that account. We can accommodate you, answer question, and make sure we set you up with the best setup for your trading needs. And at this point, let me just make sure I covered all the ground on everything that we have so far. I want to take a quick look at my PowerPoint. And again, I mentioned that before, if you're a high frequency trader, if you're selling option, if you're a newcomer, if broker assist, you'll be surprised that people do want to trade with broker assist. Obviously, I don't think so much for day trading, but if you're a swing trader, an option trader, a good broker is a great resource in my opinion. We do have quite a bit of educational features on the website, including 8 steps for better trading, the free trial for the trading algo, and much more. So again, at this point, let me see what other questions we have, and then I'm going to ask Terry if there's any questions on his side. So a good question is, have Sierra, is this indicator similar to Super Trend? I don't think so. The way you will use this indicator on Sierra, I have to actually enable you. And once you enabled, you go into the studies, and then you go to add custom study, and you open the Levix family of studies, and you will add the ILM cross, the F up, F down, and a few other studies that I didn't want to overwhelm you with. Let's take a look at the diamonds, for example. Let's see what the diamonds look like. So the diamond is an extreme, quote unquote, oversold, overbought indicator. So you can use it as an exit. In that case, you would have exited the current trade. Or as I mentioned, some traders will use it as a extreme counter trend signal. So when you get a diamond and you get a price confirmation, you want to go long on a green, short on a red. And they're usually good for at least a little bit of profit. The question is, which ones are good for the larger profit? And I think that's the question everybody wanna know and ask. Has the session been recorded? Can I watch it again? I'm pretty sure that Terry over at futures.io recorded the session, and you'll be able to watch it again. I do want to review the disclaimer again really quick. This is futures trading, highly leveraged. Make sure you use risk capital. All these opinions that you saw here are my personal opinions as Ilan Levy-Mayer. Do not guarantee profits. It's not a crystal ball. It's just things that I'm sharing with you. I've been a broker for 20 years, and every so often I get something, a tick in my head, and I'll go and I'll do some back testing and exploring, and I'll play with my charts, and I'll look at signals and see how they have done in the past, etc., etc. And that's how I came up with some of those concepts that I have. And last but not least, even though this is real-time pricing and real-time trading with a demo account, the hypothetical disclaimers still apply. My favorite part about this disclaimer is that you just cannot simulate the emotional part of trading, the agony when you're losing, the fear when you're losing, or the greed when you're winning, and that's something that no hypothetical trading can achieve. And at this point, Terry, I think we're done. I mean, I have a stop here at 27. Let me see where my stop is. Looks like we're going to get stopped out on the last one. It's a good stop because right now it looks like the market wants to reverse, so at least has a chance to do a little bit of a reversal. I don't know if it's going to happen or not, so if I'm sticking to my concept, I will keep my stop, maybe move it like half a point or not. But that's about it. So I hope you picked up an idea or two or three from this presentation. I hope you utilize the great resources we have over at cannontrading.com. I look at our competition, and I honestly think that the educational section of our website, let me go there one more time. The educational section on our website, click on trading resources, you'll see a list of all kind of educational information we put together. And this doesn't even show some of the educational features we share on our weekly newsletter, which you can sign up for and get via email simply by going here and sign up for daily futures, support and resistance levels. It's a nice email. You get it daily. You can subscribe both to the weekly newsletter and the daily support. And I think you'll enjoy the information that we share. Sometimes it's myself, sometimes it's my colleagues. And it can be articles like the other day, different markets for different trading environments. I was talking about how, too many traders only trade the bonds the mini S&P and the mini NASDAQ, but there's crude oil, there's bonds, there's gold, and they offer different type of rhythm, different type of market for trading. Okay. Let me see what's going on here with the mini NASDAQ real quick. No, still in a long position, but really I think we're winding down that long trade that we were in. That's pretty much done in my opinion. But I think it was a great example of using multiple contracts, using range bars, using what I call price confirmation, and different things in between. So once again, thank you so much for coming and taking the time out of your day to listen to me. I appreciate it. Terry, the microphone is yours.
All right, sounds good. Thank you for the webinar, for the information, and for spending some time with us this morning for us.
Yeah. So if anybody has one last question or two, I'll be more than happy. Otherwise, again, thank you, everybody, and I wish you all great trading. Trading futures is really not easy. It's probably the hardest thing I've ever done. But it's fascinating in many ways, and there's a lot of in and outs, and we are here to help you, if it's even just by a conversation. So feel free, and I wish everybody else a great trading day, a great rest of the week, and see you soon again. By the way, we just got that little red square. So for me, if I'm not out, I should be out. I know that I was out. And if I was an aggressive trader, I would probably look to do a very, very quick short-term trade to the downside, but our time is over. So thanks again, and until the next time.